Trading success is not easy. In the first year, you think you need intelligence. But after a few years, you will realize that all you need is emotional control. Remember to stay calm, stay disciplined, and keep learning.
And I'd like to welcome you guys back to the channel. I am your host, John Schaff, and you are viewing another episode of WealthWiseGuru. And looks like the bell has just rung for the trading of the day. It is June the 25th, 2024. And as you can see, the my portfolio is up significantly from the brutal beating that I received yesterday in the stock market. Last night when I went to bed, it was down about $8,000, maybe $8,500, and so today is seems to be going back up a little bit. Like I said, you guys, this is what the market do. You have good days and you have bad days in the market. Just because you have bad days doesn't mean you run and get out and take your money out. If you keep your money in and not get out of it, and then you can recover from bad times. But if you turn around and take your money out because you lost some money, then you're going to lock in those losses. And I just couldn't afford to lock in $8,500. And the thing about that $8,500, I made that through the market. Cause like I said, my portfolio was up to about $41,000. So, but yeah, I made that through the market, and I wasn't trying to lose it. And the thing about the thing that keeps me grounded is that even though I lost $8,500, that $8,500, it didn't directly come out of my pocket. It didn't directly come out of my bank account. So I was not emotionally tied to that money. Now, had I had to go out and work and save that money, and lost that money, then we might have been listening to a different outcome, because I would have been emotionally tied to that money. But due to the strategies and options and some Bitcoins that I have purchased in the market, I was able to get my portfolio up to a particular level, and I was trying to reach $50,000 before I actually pulled out my profit. But I wasn't able to do so, as you can see. And I like I said, it was still due to the Nvidia. Nvidia seemed to be carrying the market as a whole on its back. It even has outdone the S&P 500. And those of you that are not familiar with the S&P 500, the S&P 500 is like a ETF, and they have a little of everybody and everything in it. So you don't have to really be an individual stock picker if you're not really familiar with the stock market. You can just invest in the S&P 500, and you'll have a little everybody that's in the stock market or in the S&P 500. So if you have an S&P 500 portfolio, you can actually look in it and you'll see all these many different companies that is within that S&P 500 or within that ETF. Uh, and that is the professional way of doing it. Well, that is the easy way of doing it. I put it to you like that. And that is you let the market choose for you. So playing blackjack and going against the house. You playing blackjack and you are the house when you're investing in the S&P 500. So that's a good way of looking at it, and that's a safe way to invest in the market. So if you don't have the experience or education, as I have, to invest and pick an individual stock, then I would suggest that you would invest in the S&P 500. You can also invest in what we call the Magnificent Seven. The Magnificent Seven are the 7 different tech stocks that makes up the market, the tech part of the market, and they are also in the S&P 500. But the individual Magnificent Seven consists of companies like Apple, Microsoft, Google, Tesla, Facebook, and a couple of other ones. And these particular companies that actually makes up the Magnificent Seven. Matter of fact, I wouldn't put any option or any new option unless I was really familiar with that particular company, unless they was part of the Magnificent Seven. And the Magnificent Seven, as I said, are the tech stocks. And as you can see, I am up already. By the day is $1,200, well, $1,300. So I got a long way to go to make up for that $8,500. Would I get there today? Probably not. But I do have. Well, we do have. Let's see, we have today, Tuesday, Wednesday, Thursday, and Friday. So that's what 4 more days of investing that I could profit, hopefully recover from such a brutal loss. And then that depends on what the market's doing the whole day. Cause this is just a start. This is just a start of market going back up. And anytime it could something could happen. The Fed can reduce rates or raise rates. A war can break out, or a company can all of a sudden go out of business, or a bank can collapse. Anything can happen that actually cause the market to collapse. So hopefully, nothing would happen. And like I said, I usually keep myself glued to Yahoo Finance and find out what's going on in the news for today, because the news affects my portfolio. That way, I look at it and see what's going on, and see that I need to move in and out or change on a position. Well, let's go down right quick and look at the options, see what the options is doing. Like I said, this hymns coming due on Friday, 6/28. It's two buys. It's right now it's worth $1,530. It's $1,530. And like I was saying before, this is one of those stocks that I had to do a recovery of. And it's a good thing I knew what I was doing when I did that recovery. This particular stock is for showing right here. Hims. That stock has went down as far as all the way down to $5. It went down to $5. I kept watching to try to figure out what I can do, and I eventually rolled out of that position. And I rolled into a new position, and when I rolled into a new position, I did what you call a leap, means it's further out. But instead of being further out in the year, I did just further out into the month. And when I did that, yeah, it changed the profit value of it tremendously. So in other words, it rebound, and I started being profitable. So I kind of lucked off or lucked into that position. But a lot of time that don't go that way. It don't go that way. It's just not a good outcome when you get one of these options and it goes down to like $5, and you're trying to rescue it. If you are if you are doing options, then I would suggest that you don't let it get further down $5. But I was so frustrated with that particular company, I didn't know what to do. So that's like one of those last minute strategies, and obviously it worked. And as you can see, Tesla is at $60. I did a roll out position on Texas, and it's down. It's back down to $60 again. And Texas. Texas is one of those vitalities company as well. Tesla has a lot going on for them, but it's a very vitality stocks, same as Nvidia. Once upon a time, Tesla was very, very profitable, just like Nvidia is. And today, Nvidia is Tesla. If you go back 4 years ago. And let's go and scroll down. See, Nvidia now, the stock and Nvidia is worth $3,630. Uh, see, I have two option position in Nvidia, and normally this particular position will be like between five and $8,000. Just this one position, but it has gone down or declined all the way down to 36.50. So like I said, we're gonna see how it's gonna be looking at the end of the week, how much of a recovery it does. And this is my second Levitical account right here, second Levitical option, and it's at $9,280. And normally that would be between 10 and 13, maybe $14,000. So that's where I took my biggest hit yesterday in the market. That's how I lost all that all that gain. And my next biggest account is Google, and this particular Google here is worth 5,000. And this Google doesn't come due to 12/18/26. All right, this is what you call a buy. I mean, not buy. This is what you call a sell. This is sell a put. And like I said, sell a put is when you think that the particular stock is going to go up in the market. And in order to sell a put on this particular company, I forgot how much it was trading at. Let's take a look at it. Yeah, I actually bought it sold it 4/16 at 24. And like I said, come due expiration date is 12/18/26. Right now it has a value of $5,515. That's just the option. That don't include the whole market value of this particular option. And today is -$45. Total negative on this one is 16.98, just about 44.45% of my portfolio. And so, see, in order for me to buy this stock, which like I said, you have to have 100. You have to have 100 shares in order to sell a put. In order to buy into this particular option, it cost me $17,000. You see, yeah, it cost me $17,000, and I had and that's how much it cost us for me to get into it. And I have made a profit of $5,530 on top of that $17,000 that I put into it. And I was able to use the collateral of that particular stock, which was 100 shares. I was able to use those 100 shares as collateral. And so you don't, like I said, you don't. Trying to find Google here. If you guys see how much that is worth. I got two ABC Google positions, and here is the total value of it right here is $18,109, well, $100. This is total value of that option. Let's see, it's trading at $180.69. So I bought, like I said, I bought 100 shares, and right now they're selling for 18,000, and they're selling for 18,000. The reason I made this profit, total return already is $2,600 some dollars. Days return is 149. All right, this is a win-win for me, and it's a win-win for me because I own this particular stock. I did not buy what you call a call where you think the position of this particular stock is going to go up, but I sell I sold a call. Like I said, when you the difference in buying a call and the difference in selling a call. When you sell a call, that means that you own that particular company, or you have stock in that particular company. So in order for me to get in this position, I had to purchase at least 100 shares. And at that particular time when I did that, I think those 100 shares was like about 14 or 15,000 dollars. So I had to have $15,000 in order to make this particular purchase. And that is how you do options. If you don't have that kind of money, it's understandable. Then what you would do is just turn around and just do standard trading stop investment. And standard trading stop investment is that you would purchase this at this particular price, which is $180. You just purchase one and sit on it, and when you get some more money, you purchase yourself another, and you keep repeating this until you get 100 shares. And once you get 100 shares, then you can do what you call you can sell a option because you own those particular shares, or you can risk and go against the house and decide you want to buy uh, a a call because maybe you don't have the money to sell because you're not able to you don't have the money to purchase 100 shares. So you just click on trade and go to trade option. And if you wanted to say buy a put, most time when you do so, you go out 30 days, 60 days, or 90 days. Like I said before, you can also go out what's called a leap. A leap is when you go from year to year. I think the maximum leap you can do is like 2 years. So if I was to buy a call, I would go June. This is June, July, August. And so I would go out to August. You maybe September, let's go to September. So we click on September. This pops up. Now, if I own this particular share, I have 100 shares. I own it. I want to sell it. I would simply click on sell and call. And this will come up. This is a strike price. Anything below it means that you are into the money. Anything above it means that you are out of the money. The more into the money the stock is, the more it's going to cost you for collateral. More money you're going to have to put up front unless you own a whole lot of shares within that stock. And in order to do a call, you got to have at least 100 anyway. So if you don't have 100, then you're gonna first of all put the 100 shares up for collateral. And if you don't have enough, then your transaction power is going to be rejected. Either rejected or you're gonna have to put down some money with it. Now, if I wanted to do a buy because I don't have any money, I'll just simply click on. Wait a minute, do that. Simply click on buy a call. It's a totally different situation because I don't own this. That strike point down at the bottom, down at that 179 strike point. You scroll up till it started moving. I started moving. Anything below it is into the money. Anything above it is out of the money. So if I didn't really want to have any money and I wanted to put a bid in on it, I'll just simply look at one of these positions and decide which position I want. And say, let's just go just above it. And the strike date is September 20, 2024. I'll just simply hit whichever one I thought worked better for me. This will come up. And the bid at $8 times 21 for time bid. We'll keep going back and forth. Asking $8.10. Last trade, last mark was $8.10. Last trade was $8.11. Chance of profitability is 30.83, 84%. Volume is good, 34. It means you got 34 people that are actually a option trade on this position. And you got 3,978 people that's actually interested in it. The delta is good. Like I said, the delta is closer to that one. You go starting from 9 the bottom, go up, go up, go up, or you get closer to one that's more profitable that particular stock can be. And so you will hit this buy. For some reason or other, some they have technical problems or something ain't available. But if you was to purchase this position, you'll put a 1 in right up top there where you see that flashing at. And then you'll put $8.20 right here to type it in. And the likelihood of this being filled is high. So they'll tell you whether or not the transaction is good or not. And it's at your maximum loss here will be $8.15. Break even will be $193.15. So you're gonna need to have $815 just to cover this particular transaction. So what you do, you click on that and say you don't have enough of buying power. So you, by your account, your bank account is connected to to your portfolio. So you simply hit deposit, and that money will come. This will come up, see, and this money will come out of your bank account. See, my bank account is like, if I had money in my spending, it would be right here. I could click on spending and transfer that money over into an individual. But I don't have any money in my spending right now. Because all my money is in the stocks. I keep all my money in the stocks. And then you can even have a Roth IRA. And this is my particular bank account right here. My bank account is beneficial savings bank account, checking them so and so, so and so. Take 4 to 5 days for transactions to go through. You can get instant transfers. You use Apple Pay. You have a debit card on file, and like I said, once you have an established relationship with this particular uh, uh, app, Robinhood, then you can get what you call an advance. And the advance is they give you the money up front, and and uh, and then once your money come in from the bank, uh, then they get their money back. Uh, an advance allows you to go here right away and make a purchase or receive a purchase from from a particular transaction that you're trying to do on a stock. So you can go ahead and purchase that particular stock or either option right away because you had a established relationship with the platform. But like I said, we are just into the start of the day, and so far it's been pretty positive. It continues to go up, almost at $3,600. It's up already about $2,200 some dollars. So this is what I mean by uh, if your stock is down, not to panic and just wait and hold out and try and see if the market is going to recover. If for some reason or another you make a bad trade and you just simply, especially if it's an option, you just simply just roll out of that position into a new position, and thereby saving you from losing so much money. And I wasn't able to roll out of that position yesterday because the market as a whole uh, was going down. It's not only Nvidia, but a lot of other stocks that I own went down as well. And like I said, these were all riding on the back of Nvidia, and so that's what caused that great loss yesterday. but I'm trying to recover. So it just depends on at the end of the week how well the market does from henceforth until Friday. Depends on how much of a recovery that I would receive on my portfolio. Well, like I said, I know this money does not directly come out of my pocket. It did from the initial start, but after over a period of time, I built this up. Anytime I have a gain like this gain is due to the market. So it hurts in a way just to see that you lose profit, but then again, doesn't hurt because, like I said, this money is a direct gain from the shares and from the trades that you do in the market. And so we're going to be taking another look and keeping an eye on it throughout the day. And I'll probably go live again and around the midday. If not the midday, I'll go live again at the end of closing and bring you guys another report on how well my portfolio did today. And you are listening to WealthWise Guru. And I'm your host, John Shaft. And I'd ask you to hit the like button, share button, and subscribe to the channel. And hit the notification button so you will know when we are doing a upload. So thank you for watching. See you guys again in the next video upload.
Right. Do the talking.